Hi, I'm David Bodemer, the Editorial Director with National Real Estate Investor. We're here with David Weiss at the Strategic Real Estate Investment Summit. David was former Chief Economist at Standard & Poor's and is now a visiting fellow at Brown University. So thank you so much for joining us.
Thank you.
You were part of a panel of where there was some discussion of the state of the economy and the implications for commercial real estate. So what were your sort of kind of takeaways from that discussion?
Well, I think commercial real estate obviously suffered greatly during the recession. It always does.
Right.
This time worse than usual because the job losses were so high. That means you got a lot of empty office space. Mm-hmm. Retailing, you closed down a lot of stores. That means you've got a lot of empty real estate. If you've got all these empty stores, if you've got all these empty offices, it's hard to rent them out for reasonable prices. And why in the heck do you want to build any more?
Right. So that was kind of like the backdrop that we had, and like now, there's been some recovery. I mean, although I guess I feel like I've seen in a lot of segments there vacancies have flatlined. Multifamily is the one that's sort of kind of done the best. What do you see that? Do you see much improvement coming, or is it going to be dependent still on this jobs question?
It depends on the job question. Multifamily is a little different issue, but if you look at the retail and if you look at office space, underlying fact is we lost 8.5 million jobs during the recession. We've only gotten back about 3 million of them. That means you're still down 5.5 million. And it'll probably be at least 3 years before we get back to where we were back in 2007.
Right, in terms of total employment.
So I don't see commercial real estate bouncing up, certainly in terms of construction activity, until then. You will see values as people see this coming. Valuations will start to come up. But vacancy rates remain unusually high and will stay unusually high, although I think declining, for an extended period. Multifamily is a different case because that's, of course, been affected by what happened to single family.
Right.
Everybody that got foreclosed on, everybody that couldn't get a new mortgage because banks have tightened their requirements, they're now renting. So you're seeing a big shift from single family to multifamily, which is helping multis. Unfortunately, not helping singles.
And what about the effect that like Fannie and Freddie have in terms of like helping provide capital for that market? And it seems like generally lenders in general are pretty bullish on that sector.
Well, Fannie and Freddie basically are the market right now. There's no securitization going on because you can't compete with what Fannie and Freddie are doing, except in sort of the super jumbo level. And until we find out what's going to happen to Fannie and Freddie, I don't think the private market is going to step up to the plate and replace them. As long as they have this preferred status with the government, as long as the government stands behind those securities, you can't compete with that.
Okay. And what about, I think there was some discussion of capital markets more generally, and the little bit of the reemergence of securitization, not nearly to the levels that we had before, but like where do you see all that going?
Well, we are seeing some securitization come back. It's still very low compared to what it was before the crisis. Frankly, probably got too high during the crisis, so that shouldn't be a shock. The real problem, though, is that the regulations are still in flux. Dodd-Frank was passed. Obviously, Republicans are threatening to veto or to rescind it. But even under current law, we haven't written the regulations to flesh out Dodd-Frank.
They're way behind schedule, right? Where they're supposed
They're
to
way
be.
behind schedule. Yeah. These were supposed to be done by now, and they won't be done until after the election. So I think it's going to depend on the next election. But right now, banks are a little afraid to do much of anything because they don't know what the regs are going to look like next year.
Well, that makes sense. All right, well, thank you so much for sharing some of your thoughts.
Thank you.
And thank you for coming to the panel, and thank you for watching our videos from the Strategic Real Estate Investment Conference.